Welcome traders to this week's Simple Market Metrics review. So we're gonna briefly go over last week. As you can see, there's some trades in bold that I had for some reason. Go to this. I had the enable time filter, but the time zone wasn't on the correct time zone. So it was pushing back all those times before pretty much 9:15 on Chicago time. So I just took off the filter. And so now there's trades that had showed up that weren't there before, now that the time filter has been disabled. So going back this, and I had to type in NQH 2025. Go back to last week, so that was the previous contract. We are currently on the M contract that rolled on Monday. So on this contract, it's not showing everything on the chart, but you can see right here that red dot. So there was the sell. And then as you can see here, we're going for 40 ticks. We got that 9 o'clock. So that's that closes at 9:02 Chicago time. So there's the 10th. Then the 11th, let's see, we had this one, the close of the 9:24 for a win. Let's see, we actually already had all those. So we're just gonna jump to the 14th. We just don't rehash all the stuff. All right, so the 14th, we had this one close of 9 o'clock, so it's 9:02 candle. This one pulled down. It says a low of 77.50, so that was a few points past. You didn't get that fill and you held it through this. Technically, it didn't close above the profit wave before coming back down about 12 minutes later. So we had that one, and then we already added this one on there. And then so now we got to change this to M. For Monday, it seems like if you just do a continuous contract, Monday doesn't look correct. It's not really showing anything. All right, so then that week ended up being 10-0 for plus 1,600 instead. You got those two extra trades. And so the 17th, we had two trades. Close of that one, close of that one, 2 wins for the day. And you had this, let's see, Tuesday. Yep, just this one trade. The close of that is 950. And then Wednesday, the 19th. There's one win. There's your second win. '20th, we had close of that candle, close of this candle. Make sure 10 points, 10 points. And Friday, hit that one win, chopped around. Since it turned red and then back to green, it gave you a second signal. So there's your 2 wins. So that was plus 1,800 for the week. And then we also corrected in the profit total. Let's see, this right here, the close of the 929 candle, minus 288. We already showed in the video. It doesn't even look right. And so we're just disregarding that one. Not even sure if the signal would have even dropped. And it dropped another one, so you did get your 3 wins regardless. If you took this one for the win, or if it didn't even populate and you got this one. So now that has already been addressed in this total. So you can see over the past 24 weeks, if you just trade one contract while alternating 1 versus 2 minute, over $8,600, another plus 2,000 if you double the size on the 1 minute. So you're over $10,670 for 24 weeks. Does bump it to an 83% win rate, with being undefeated the past 2 weeks. If you just trade the 1 hour a day plus 7105 for that one, and it's even higher at 86% win rate. But again, the risk is slightly more than the risk on that one. So this one is coming back strong. And so also with the market replay that I did in the previous video that showed the results. So I'll probably wait, yeah, I'll just wait till the end of the month and do marches, and then we'll see what that entails if you had the 3x stop versus moving your stop far out of the way and only using the profit wave. So RTY was 6-0 this week, but last week, with again just going through and looking at the correct one, that actually gave us a loss with these two big losses, 113 and 57. So it turned negative 8-2 that week, but 6-0 plus 420 for the week. I mean, you're not really positive at 560 with all the commissions you paid. Risk is 4 times the profit target. And then, I mean, really, if you just do the 9-10, has the same win rate, but your risk 2.6. You stay out of those bigger losses on that one. So plus 1435, you multiply that by 3 in order to be similar to NQ's dollar amount size. And so NQ is still more profitable with doing that. It still has the edge if you divide the total by 24 weeks and then divide this total by 18 weeks. And YM still a piece of garbage. So low win rate, you're not really profitable with all the commissions, no matter how you slice it. Cherry picking times, you're not profitable. So for the week, you're minus 190, 3-2. You just took this huge loss. So that one, was pretty big. And then going through, you did have extra 3 wins on the previous week. You'd be plus 600, but still not looking good. And then the ES, so looking very strong over the past 2 weeks. So we'll just look at the week of the 10th, going back through the contracts. I mean, you added a whole bunch of wins right there. 3, 6, 8 wins instead of the original 3 that we had. But we do 3 and done, so we wouldn't take this last one. So plus 1100 for that week. This week, 9-1 plus 562.50. You took a 27 tick loss, not that big of a deal. But if you look at the trades, the best, most profitable time of the day is the market open for those 3 candles. You got 1 win right here, 2 wins right there, 3. So you have 3 wins in the past 2 weeks. I mean, let's see, 24 weeks, so about 6 months, so 30 trades. So you'd only get like 5 trades a month doing that. But it's plus 1900, 87% win rate. Most efficient time, you're just trading less than 10 minutes a day. You take on trading view. Again, close of this candle, 828 candle, ends up being 830. Just how they do it versus NinjaTrader. So, and all these times are actually marked for NinjaTrader, since that's what I use. So you'd have 3 candles of your entry chances. You would only get 1 potential trade a day. So again, if you had um, a daily loss limit, any of those settings, you're not worried about giving back profits. You're one and done. So, um, and then the risk. So 2,700, minus 1,900, so that's $800 on losses. So it's an average of $200 a loss. That's just 2x. So, so they varied anywhere from like 12 ticks to, you know, 20 ticks and stuff, something like that. Um, so but the risk is lower than all the normal. And this time zone and this time frame keeps you out of any news trades too. You're just catching the market open momentum. That's it. So, um, I mean, again, it's pretty much on par with trading the full half hour. What's the point? You're an extra $300. But look how much more time you have to trade. And again, just trading the whole session, the 90 minutes, 80% win rate, but your risk ends up being pretty high. So it's probably not it's not really that profitable after commissions. So yeah, I mean, pretty much $4 or $5 times 200 trades, that just wipes out all of your profits. So rather than 530, so $150 in commissions. So you're less than 10% commissions is like your cost. That'd be very good. Let's see. Yeah, we went over all three. So ES is the most interesting one, but NQ, is battling back. I mean, that's 9, 10, 11, 12, 13, 14. That's 14 trades in a row, to help us climb back. I mean, we had a lot of wins in this week. It really helped because these two huge losses. I mean, you take almost 500 ticks, like about like almost $2,500 in losses in 2 days, and those are back-to-back trades. So there we go. We'll keep at it. Thanks for watching. Thanks for using the affiliate link, and we'll see what next week brings.